Welcome everybody, welcome to another market update for the week. Sunday after the market closed on the 2nd of March. Here's where we look at the long-term trend as well as the short-term trend for the stock market. And this affects everything, which is why we look at it. Your pension, investments. It's a forecasting tool for the real economy. This chart here is going back over several years. You can see 2015 up to the present day. And here's the bull market that began in October 2016, and my proprietary system said to get in there and hasn't got us out yet. Week to week action, there's little zigzags here, and the action's smoothed out by these kind of average lines here called moving averages, 40 week here and 70 week. Over for the last 40 weeks, the 70 weeks, what's it been doing? And you can see it's pointing up, and the averages, the price of the stock market is above that upwards pointing moving average, and that's a bullish position. This is a bull market. It's still a bull market, and despite this recent spout of volatility that you see here, after all this steady upwards trend that, to be fair, should have corrected early but didn't, then got carried away with itself, and then now it's sort of desperately trying to find its feet again. So that's the big picture here. You can see this is very much still in its let's look at the big picture. You know, it's very much still in its uptrend here, and it's easy with the day-to-day action to get swept away by headlines and short-term action and forget the big picture. Something like this. You could draw a number of lines here, but that's quite a long and good one. And you can see there was the trend, got ahead of the trend, and then bounced off, and then it's bounced back a little bit too quickly for my liking, and now it's come back again. Let's have a look at the day-to-day picture. Zooming in about 6 months, and we can see there's that blow off there that was silly, and then it started to correct, came back very quickly. Although, as I did observe a couple of weeks ago, this rally was on declining volume, and that's not always a good sign. Then it sort of got ahead of itself, and then actually during the week things started to look a little bit dicey. Actually, you see this closing at the bottom of its range, 2 days running here on rising volume, which you could tell then the sell-off was underway again. I did mention last weekend actually that I won't be surprised at all if this market did come down and try and test this area again. And it finished on Friday not too badly, because well, first of all, on Thursday it didn't close at the bottom of its range like these two here, and it bounced back on Friday after going down during the day. So ended the week on a comforting note after what was starting to say rising volume, looking like it was looking a bit dodgy. But one clue that you can always look, we're looking at the S&P 500 here. And you really should look at all the indexes together, the main indexes, and in the States, which is the one we really look at, with the NASDAQ, the Dow Jones Industrials, as well as the S&P 500. And so how can you know if they're all in sync as they should be? Well, you can go to the NYA, which is the composite. It's like the combination of all those things together, or the NASDAQ, the Dow Jones, the S&P 500. And you could see here from this one, there was kind of a non-confirmation underway. The S&P 500 was doing well, but the overall index, the composite, just barely got above the 50-day on this move upwards, and then it turned back again. Not a healthy sign. So there's still no danger of anything more than just a healthy correction. And it's working off this. Those buyers who got in here who were looking to get out because they're frightened off because that's the dumb money. Working off this still, no surprises here. As long as this stays above the 200-day, then it's still in good shape. Anything below the 200-day on the NYA or any of the major indexes, and it start to worry a bit more. But right now, this is still just a healthy correction. And to sum up, then, this is still very much a bull market on the big picture. It's still very much in the upwards trend. Short term, it's hard to say what's going to happen this week. All I can do is look at the picture right now, and is it going to bounce up? Is it going to stay down there? Nobody can really tell. But I never like to say in this condition here that the trend is up. There's actually no way of telling. What I'm looking for to say all clear again is a follow-through day on rising volume. You see, We didn't really get that on this last one. See, you got these up days here, but the volume kept sort of like dropping. We had one or two, but I'm looking for, 2 or 3 consistent days, rising price and rising volume before we see anything here. What we've had on this week actually is a rising volume on the downside. So still on, not nothing to worry about, but still on alert. So I can't really declare this an uptrend yet. I'm staying on the sidelines for any short-term trends and not opening anything new. But still very much a bull market, and we have to watch closely this week to see about the shorter term trend. I'll speak to you next time.